Hello, everybody. How's it going? My kids are currently napping. We'll see how much real time I can watch. Thank you, Christopher Crow Buteau. Christopher Crow Buteau, you should be very upset at your parents for that hyphenated name. There's just no excuse for that. Krog or Buteau should have given up, and you should be a Christopher Krog or a Christopher Buteau. Anyway, I've been drinking since 1, so this is going to be a doozy of a YouTube. That was a very interesting phone call and lack of press release. Can't hear you. Uh-oh. Can nobody hear me right now? Can anybody else not hear me? Somebody type and tell me if they can hear me. If not, I'll have to restart the computer. Oh, no. You're the only one that can't hear me, Armin. Sorry, your computer's broken. Okay, thanks, guys. Hyphenated with my wife. I'm the idiot parent passing it on to my kids. Oh, that's so bad, Christopher Krogbuteau. My wife's last name is a doozy, and we used to joke about her taking my name or me taking her name. And I told her I would take her name if our names were reversed, because her last name is very long and very Russian. She doesn't believe me. She thinks I would not do it. Anyway, back to Magnachip. I have a lot to talk about here. So what we didn't get, we did not get Q4 numbers. We did not get Q1 guidance, and we did not get 2022 guidance. Okay, what we did get was a rather lame capital return, which I'm very skeptical about, and I'll get into that more in detail. But basically, they told us they're going to give us the 75 million, which is just the break, and the rest of the money is just going to stick on the balance sheet, and they're going to use it for organic growth, M&A, whatever. Oh, this fucking dog. Hold on one second. Come on, let's go. Okay, I'm going to get into that in more detail later, okay? But that was bad, but I also think that it's not super relevant. In the near term, we'll have 37.5 million repurchased by the end of Q1, which is about 4% of the outstanding shares, and another 37.5 million that I guess can be repurchased at the same time or after. I have no idea how that works. If the company is required not to repurchase additional stock while the ASR is outstanding. But the 4% of the outstanding shares will be done 3.5%, 4% by the end of Q1. Okay. What's interesting about that, I guess I might as well stick with this for a second, is that they're not giving us guidance or numbers until the middle of February. And it's my understanding from reading the ASR contract, and especially because it's supposed to be done, completed by the end of Q1. It doesn't say March 31st, 2021. It says at some point in Q1, the final date of that purchase agreement is over. And they purposely redact, and just to leave out, actually don't redact, it's blank, the dates it starts and the dates it ends. I guess it behooves the company to not give us good news if they're going to be in the market buying back stock every day in the next 6 weeks. It seems very unlikely to me that the buyback will start on February 15th and end on March 31st. It could. That would be about 30 trading days or so. And they need to buy back about 2 million shares. So that would be 75,000 shares, 70,000 shares a day, which before the increased volume would have been a decent percentage of daily volume. And I don't think that is what they had in mind. We're never to get a straight answer out of them if they're buying back stock now or if they have to wait until they report earnings to buy back stock. The way I read it is they can buy back stock now. JP Morgan can buy back stock now because JP Morgan is not in possession of any material non-public information, is how I read the agreement. Okay. I'll get more into that in the future. But let's talk about the only interesting thing in the report. So the only guidance or any numbers they give us at all were updating their 2020 to 2023 plans. And the 2020-2023 plans were published in October of 2020. And it called for double-digit CAGR revenue growth. Now, that wasn't 2020 over 2019. That was 2020 to 2023. So 2021, 2022, and 2023. That's how I interpret that anyway. I think 2020 had decent revenue growth too, but it doesn't change my point of what I'm about to make here. If you assume that 2021 ends the way it began, which is the street has them at down 3% revenue, and if you assume, Maisie, and if you assume that 2022 is somewhat muted in the first half of the year, the street's at 7%. Again, no one has any idea what this company's going to do. To get to double-digit CAGR with a down 3% 2020 and a plus or a flat, positive flat 2022, you need to exit 2022 and a 2023 of explosive growth, 30, 40%. What do you think Magnachip will do, the stock price will do, if 2023 has revenue growth of 30 or 40%? When this year they should do upwards of $1.50 in earnings before that revenue growth hits on a stock that is $12 adjusted for cash right now. They make it clear in the slideshow that their double-digit CAGR they expect is inclusive and under the assumption of the supply constraints of 2021 and 2022. He also said that they had 50% more demand last year than they could supply, and that's in a market, an overall market that's growing double digits in itself. So that's not a stagnant thing. That'll grow as well over the next couple of years. The other thing that was very positive was that he dropped a bunch of keywords while he was doing the call. So some of the analysts asked really good questions, which is rare in this business, especially for small companies. But they pushed back on the double-digit CAGR, multiple people, and then said, based on your comments about supply, should we expect 2022 to possibly be down? Well, he flat out said it will plateau or up depending on supply situation. So we can throw away down. He didn't say we hope it's plateaued or up. It will be plateaued or up. This is a company that also is notorious sandbaggers. Oh, before I forget, Fat Eddie, I couldn't let you join my Twitter because Twitter doesn't work anymore for me. I can't find you or find anybody that isn't a new request because I have thousands of people that have requested to follow me over the years, and I can't control F for a screen name. So the best thing you can do is block me, unblock me, and then try to refollow me, and then maybe it'll be up in the top. But I'm sorry about that. I did try. I spent like 15 minutes trying to find Fat Eddie, probably one of the low points of my life, and I couldn't find it. He also said, which I thought was an interesting line, how when they're talking about them entering the car market, how ourselves and our neighbors are the only ones that have this high-end technology. And they're talking about Samsung. Them and Samsung, you can go look it up, have something like a 70% market share in certain OLED markets. I thought that the general language about the customers and about the business was incredibly positive. The biggest black swan here was that Samsung was going to pull its business as a retaliatory thing after the China purchase. Well, China's obviously not buying them now. And if the company was under the expectation of Samsung pulling business, they certainly wouldn't be increasing their goals in 2020 to 2023. Every line item was increased. And by definition, by keeping the double-digit CAGR through 2023, they're accelerating what they think revenue is going to go to versus what they thought a year and a half ago. I mean, he couldn't have been more clear that it had nothing to do with the fundamentals of their business. It had everything to do with the supply side, which if you can do a Google search on DDIC and OLED, you'll see it's all true. There's nothing that the company's not making anything up. I'd like to go back to last year, to the fall of 2020 and the spring of 2021. This company is not really to be trusted. There are big time sandbaggers, and they definitely will not tell you what they are planning internally. Let me expand. So in the fall of 2020, they were supposed to announce have an analyst day in November and announce a capital return program. And as we all know, as I've said, they delayed it. They blamed COVID, and they said they'll do it in Q1. When earnings came in February and Q1, they delayed it to April. We know why both those things happened. They both were because they were in the middle of a process, both in November and in February. Of course, they didn't tell us that, but that's why they did it. When the company announced the buyback 2 weeks ago, they put in I'm not sure actually that was in the buyback. That might have been in the original PR a week earlier. They put in a poison pill. And the poison pill was very clear what it said. I'll read it to you. Poison pill says, or that press release says, which I read it, but I think it's important to really see what it's really. It was 8 days before the buyback announcement. It was, Magnachip's board of directors is actively engaged in determining the best way to return and enhance value to shareholders. Accordingly, in order to allow adequate time to evaluate all options, the board has adopted a limited duration shareholders' rights plan. It's a 1-year plan that didn't go into effect until December 23rd. Okay. On December 21st, they announced the buyback. And today, January 6th, they've announced nothing. Why they need the poison pill, right? You think it was just to come up with a $75 million stock repurchase 8 days later? Of course not. I believe strongly the company is going to be actively involved in the next 6 months to come up with a plan B. And whether they succeed or not, who knows? But that's, of course, what they're doing. And the only way that they can assuade investors, you can go back and look at my old YouTubes from last time and the time before. I expected no further capital return today. No announcement about a dividend, no announcement about another buyback, no announcement about a tender. They just gave us this $75 million token buyback 3 weeks ago. The purpose of that was to not have to do that now. And that's what we get. This is what we think the balance sheet should look like: $100 million of cash, which would leave, by the way, about $5 a share in cash to be distributed or to be used for organic or inorganic growth, whatever the hell that means. But they have no incentive to talk up an aggressive stock repurchase plan, and certainly no incentive to pay a dividend right now if the board of directors is trying to figure out a plan B after the disastrous failed acquisition, where they look embarrassed for all of us bag holding at $20 a share when it should be $29 a share right now. So I don't pay any real credence to what the capital return plan is now. Also, they should do $1.50 in free cash flow this year. And they didn't even discuss what their go-forward plans are with the cash flow that they generate. Right? So maybe not $1.50, maybe $1.25. But it wasn't even discussed. And I don't think that they can have that discussion until they see what the next stage is. I don't know. I don't know what to make about lack of disclosure on quarter four and quarter one. I think that if the margin situation and the quarter was going to be bad, I can't come up with any reason why they wouldn't disclose. First of all, they would disclose so that they can buy back stock cheaper, right? If they're in the market right now, you want to pay less for stock, not more. It's also from a regulatory perspective, Reg FD perspective, you want to disclose that. They used to guide in the past. They haven't guided this time. They know what the street numbers are at. I have a hard time believing that they have a bad quarter. What's more likely, I think, is that they are going to be actively engaged with suitors the next 6 weeks. I don't think anything happens that quickly, but that's the more likely outcome. They're not looking to give us quarter four, quarter one, 2022 to when they're going to be actively engaged with suitors. Now, we know that the suitors are limited. The only one that's definitely passable is a South Korean company. It's possible an American company could buy them. But even that's, I don't know if they take the risk without getting the okay from Samsung and Korea. They've learned a lot, I'm sure, during this process. I don't think they're going to make the same mistake again. And I'm not worried about them going into contract with somebody that can't buy them. I would say that I'm really surprised by the 2022 guidance. Sorry, 2023 guidance. That it's much more aggressive than I thought they would be because they're so conservative. I thought the original 2020 guidance for 2023 was too low. Any math you did on gross margin or free cash flow margin, it made no sense based on where they were. I mean, they just raised their operating margin from 10 to 15%. And if they do the double-digit CAGR revenue, I can tell you right now, that would I mean, they did 507 million of sales in 2020. I don't remember what the growth was in 2020. They did grow, but that was also COVID too, which wasn't great at all. I don't remember what it was. It definitely wasn't huge growth. But let's just put that aside. For them to get to a double-digit CAGR, they would have to do they would have to do 560 in 2021. I'm just doing it easier doing it this way. They'd have to do 610, 616 in 2022. Write this down. This is truly unbelievable, actually, the numbers that they come up with. And then for 2023, they'd have to do 686, 690, I think, right? 680. Okay, so they'd have to do 680 in revenues in 2023. The street's at 525 for this year, and that's a 7% growth. 525. They have to do 680. They'd have to do 30% growth next year. If they did 7% this year. So it just doesn't behoove them to be reiterating those targets to miss them. And I think they must have a really clear line of sight into their supply and into their demand to give us numbers like that. And if you got to that 680 and you did a 15% operating margin, you would do like 100 million in operating in operating profit. Just $2.50 a share next year. That's before any buybacks. and I'm at 150 this year. That's pre-tax. So you tax affect that, you still get to $2 a share in earnings next year from $1.08 this year. I mean, I don't know what to tell you. It's a $12 stock. My basic takeaway is they believe demand is so robust that once supply constraints ease, the 2023 sales targets are pretty close to 2022 demand. Won't get dividend while selling company is still in director's mind. Buyback is far more accretive. It's also not in the interest of management to do dividend. They have stock options. And I note that the CEO has 200,000 shares with a strike of 16 something that expire in the middle of 2023. All in, he's got over 500,000 shares exposed, either own shares or in the money options. He's very incentivized to get the stock up, and there have been no sales. Oh, my buddy just sent me a model here. Let's see what we got here. My buddy gets to $1.70 in earnings in 2023, $1.30 this year, $1.30 in 2021, and $1.30 in 2022. He gets there by, I want to see what he does. He probably brings gross margin down this year. Let me see what he does here. I'm just looking real quick to see what he does here. It's a pretty fair model. Let me see what he does with shares. He does not have any accretion for buyback, so obviously that's not right. They'll gain about 4% accretion just in the first quarter. So that'll get them to $1.36 or $1.37 in his model. And that's without any buybacks the rest of the year. Like I said, I'm at $1.50. So we're basically in the same ballpark. He has SG&A and R&D spiking pretty significantly. And he has gross profit only going up by 8%. I'm trying to see what he has as his well, he has total revenue in 2023 of 630. And I just told you that to get to the CAGR you need to get to, revenue has to be 680. Though he has transitionary revenues in there too. I see now. He has it at 670. But even then, by the way, I'm only using the 10%, the lowest it could be with double-digit CAGR. Oh, he has gross profit as a percent of revs pretty low. He has it at 32%, just holding still for the next 2 years while everything surges. It's a good model. I think margins will be better than what he has. What does he have for tax? And he has a tax rate of 22%. So I don't know. What's my final takeaway with this? It's going to be more of a waiting game, you know? I mean, every day they're in the market, they're buying back stock. And the lower the stock is, the more accretive it is. The stock's doing absolutely nothing in the after hours. Nothing. The bid in 1994 has been there. Not one human being is hitting it. And the stock's there at 2020, no one's hitting it. And this is why I was saying last time, and I think on Twitter today, I didn't necessarily expect this to be a high vol event. You know, I thought that there was no real downside, but I could see a situation where it wasn't going to be a big upside either. The market was pricing at 10% and 10% move, and it's clearly not going to be a 10% move tomorrow. So, but I only own stock. I don't have any options here. Fat Eddie, go listen to the beginning of the YouTube, and you'll see I call you out in the YouTube. You'll see why you're not following me yet. Sorry about that. I think that the path here is in the next 6 months, next 4 months, we could get a deal. I don't think it should take forever for them to conclude whatever they're doing. And then if you get to the summer, you then are looking out at the second half of 2022 and the explosive growth in 2023, and the stock will re-rate. I mean, if they put up those revenue numbers, there's no reason why it can't be a $35 stock on 2023 numbers if it's $1.75 or $2. And then the real question is, what's your downside? What's your risk? And I don't know what your risk is here. Your risk was that Samsung pulled the business. If Samsung doesn't pull the business, what's your downside of $20 stock with, $8 in cash, and in 2021 actual numbers they're going to do, over $1.25 in earnings. It puzzles me. This is not a declining business. This isn't some dying, boring business. So we'll wait. We'll see what the stock does. We'll see what happens when it comes to strategic news. I don't have my fingers crossed that we'll hear anything anytime soon. I'm very interested to see what happens with Q4, obviously, with Q1. What was their agenda by not telling us their revenue numbers for Q4? They've done it in the past. They've guided to it in the past, months before the quarter's over. Go back and look. Every quarter, they guide to the future quarter, the top line. They could have given us the top line and an approximate gross margin. They didn't do it. So if your conspiracy theory is that it's terrible, then why would we be buying back stock at a high price ahead of crappy numbers? It doesn't make any sense to me. Is it likely they don't want to say anything that will affect the stock price while the ASR are going? Yeah, Praven, that's exactly what I'm saying. That's what I said earlier on. I'm not 100% sure they're allowed to buy back stock now, but I think they are, because I talk about this all, Praven, earlier on the video. You should watch it. I don't think that the ASR can be completed so quickly if they're not buying back stock right now. Yeah, before I forget, with CTIC, I've sold most of my stock there. It worked. The stock went from $1.80, well, really as low as $1.60 to $2.50. I still think strongly it gets approved. It was just really a capital allocation decision. I still have about 75 basis points in options and about 150 basis points in stock. And again, I very much think that it's going to be approved, but I wasn't looking to stick around when it got to the 240s and 250s at the size I was in. Groupon. Man, I have no idea what Groupon's doing the last few days. As you guys probably saw, there was a big hedge fund that likes to publish big reports that posted a report on Groupon, Prescient Capital, I think it's called. Their report is basically what I've been saying for a year and a half. I don't think that would be enough or anything, but it's all the same stuff. That there's a core user base. I've talked about the sum of the parts with the sum up some of the parts with the sum up stake, and I don't know why Groupon went to 27 yesterday and then went to 24 today. It's clearly the odds of something happening in Groupon from a strategic perspective are very low. You never say never with these things, but they hired a new CEO. They're paying him $17 million in stock. He got like 700,000 shares. And I don't think they're planning on selling anytime soon. So hopefully we don't get a complete shit show when the numbers come for Q4. I'm expecting nothing good at all. I mean, honestly, you should expect it to be just not good. And I don't think the market's expecting much in either, given COVID and everything. But yeah, I know B Greenblatt. They think they're very, very optimistic about what the value of that payments app is. That's not their pitch. They think it's worth $80 to $100 a share, and they have the payments app investment at whatever, $10 or $7 or something. They're just saying that your margin of safety is there because of that position. And I highlighted that last quarter, that the stock probably should have been up more than just a few dollars, just in the fact that they have this hidden investment that's worth a lot of money that can be monetized whenever they want it to be. My biggest position by far is Magnachip, by a factor of multiples. And then my next two biggest positions are Blackstone Mineral, BSM, which is a mineral rights company, which I've talked about on here before, and Groupon, which is smaller, much smaller than it used to be, which is all call spreads, all January 23 call spreads, some April 23 call spreads. And then I have a January 2030 call spread that I haven't decided what I'm going to do if it expires below 30, whether I sell the stock and I just keep the other call spreads. But Groupon's still a big position from a delta adjusted perspective. It's just not, I don't own any common anymore. So my capital risk is much lower. I don't even know. It's probably like 1,000 basis points or 800 basis points or something. It's not nothing. It's a lot, but it's not nearly as much as it once was. And my other positions are smaller. Those are by far my three biggest positions. I can get this stuff now. And you look, and based on what I heard with Magnachip today, it's not going to go up a lot. So absent it going to the 23 to 25 area, I don't see myself selling any, unless Interactive Brokers makes me one day. They do something crazy with the margin. But I'm just here. I'm here to wait. I'm waiting. I'll wait it out. I can think of a lot worse things to have my money in next year, because you have a clear path to, explosive earnings towards the end of next year. And then kind of the sky's the limit, with the power business getting 40% increase in capacity. And then with them getting more fabs online from the other side. Curious how much margin percentage you generally keep, willing to say. I could do a whole YouTube on margin. I talked about it on Twitter a little bit. I think that margin, it has to do with what you own and the profile of your portfolio, not necessarily how much money you're borrowing. So a lot of people, they refuse to take anything on margin. Margin's, the devil. But the example I used on Twitter, which is obviously an extreme example, what would be a more conservative portfolio? If I had 500% of my money in Pershing, PSTH right now at 1980, and I was levered 5x, or I had 50%, I said 100%, but we'll just say 50% of my portfolio in meme stocks, AMC, GME, though I think GME is up a lot right now, right? 25%. Clearly the answer is that you're more risked in the meme stocks than you are in the Pershing. So when I look at margin, I'm willing to make things like Magnachip so big, though that's way riskier, of course, than a SPAC trading below cash, because Magnachip has no debt and $8 a share in cash. So for me, I am creating my own levered position that the company won't do, right? They won't buy back the stock and lever up. So I'm levering up for them. So, my enterprise value position in Magnachip is lower than $20. Of course, if we have an 08 or a March 2020, could Magnachip go to $10? Of course it could. Anything could happen. So when I do margin, it just ranges. The actual dollars that I borrow, it could be anywhere from 25 to 100% of my portfolio. But a lot of that might be in SPACs below cash. Delta adjusted, my net exposure is 200% right now. Because, I have things like the Groupon position. The Groupon position, I'm only risking 500 basis points or 600 basis points in capital, but it's a 20% position, delta adjusted. Magnachip, of course, is all common, and Blackstone Mineral is all common. I own things like Crestwood Preferred. I've owned that for years. I consider that kind of a cash alternative. But again, that went to $2 in March 2020. Its par is like 9.20. It went to $2. And I thought that was kind of a cash alternative. My point is, I'm still learning lessons, 15 years after doing this, professionally solo. I've been doing it 20 years professionally altogether. And the way I manage it is I have to cut. I'm in a position of having to cut when the market collapses. When a lot of people want to be in a position to be able to add when the market collapses. And I don't think either one is right or wrong. I'm definitely more aggressive, but I think the things that I own hopefully are more conservative. They're not. I'm not buying 20 times revenue stocks on margin. So that's the short answer. Is I don't have. I feel what my portfolio is doing. If I have big drawdowns on days the market's down a lot, if it happens 5 days in a row or a month or whatever, I have to reevaluate what my positions are. Clearly, my biggest risk right now by far is Magnachip, and nothing I heard in that call makes me scared about Magnachip by any means. So, if anything, I'm more reinvigorated. I'm upset that they're not at least publicly articulating a better, more aggressive capital return. But as I said, I don't really trust them at all. I mean, they weren't doing that in the fall of 2020 or the winter of 2021 either. So let's just see what happens. Any other questions, anybody? Not sure. I thought on my Ouija board it would be that the stock literally didn't move at all. I mean, they didn't give us any numbers. They gave us 2022 guidance, and they gave 2023 guidance, and they gave us a lame, long-term capital return plan. Sell puts on MX. So here's a lesson on options. The only time I sell puts is the same reason why I would sell a call. Is I don't think that there is going to be a big move either way in the future. They are the same thing. Owning stock and selling a call against it is exactly the same as selling a put. You have unlimited downside and you have a capped upside. Now with Magnachip, I do not think that there is any downside. It's true. I don't think there's any downside at 22 though. I was wrong at the 17. I definitely think that there is upside. Will the upside happen in the next 4 weeks? I don't know. Go pull up Magnachip's chart from last year. I happened to see it today. I couldn't believe it. It went from like 10 to 18 in like 8 days, 12 to 18 or something, the first week of January last year. Now, do I think Magnachip is going to surge the next 2 weeks? Of course I don't. But I am not one to time either events or price action with a stock that I think is severely undervalued. So you can sell puts here in February, March, whatever, and collect 50 cents, $1, $1.50, selling 17.50 or 20 puts. But you're just clipping coupons of something that has explosive upside. Whether it's another buyout at $30 or $35 a share, or the stock just going back to 25 where it should be right now. That's my view of selling puts on any stock. The best puts to sell usually are on very high vol biotech that has no event in the near future. So you sell a month or 2 month out, kind of at the money or out of the money puts. But again, those stocks move crazy too. So, you can go up 25% with the XBI if XBI ever goes up again. So generally speaking, I'm not a put seller. I like to buy call spreads and I like to own stock. Pretty rare that I just want to own a call. I like the fixed nature of the call spread, and I like the liquidity of the call spread. It's much easier for me to get on than just calls in smaller liquid names. The next catalyst for MX is definitely earnings in the middle of February, and then guidance for Q1. I mean, based on that call, they're insinuating, don't expect much. And I would guess analysts take their numbers down. And then analysts like surge their numbers for 2023. So I don't think there'll be any downgrades tomorrow. I think Oppenheimer actually has a hold on it. So they're definitely not downgrading. But the other two, I don't know what they'll do. Most likely, the real next catalyst for MX is a March, April timeframe of a deal. Maybe even late February. But I would think more like March, April, May is when you would see it. But I put out like probably 20, 25%. And then come next summer, the sky's the limit because you're going to be looking out to the next 6 quarters of, just pure on vertical. I mean, this thing does 30% revenue growth. Forget it. The likely price of a deal, I've talked about that in previous YouTubes. I mean, if you just take the $29 deal that Wise Road paid and you roll forward the clock a year and a half and you add the breakup fee, you get to mid-30s. And that's not even off of using the SMH as a comp. If you use the SMH as a comp, you get to 40. Or high 30s. So my range is somewhere between 30 and 40 for a deal. Based on time and the breakup fee, inflation, whatever. Less stock, less shares outstanding. Right? That's a huge deal. If they buy back a bunch of stock at $20, I mean, the company, that a new buyer can pay $35 anytime they want to. Kid Dynamite in the house. Hi, just checking in. Want me to call in live to talk relative value of the fart jar NFTs. I don't know if you guys know this, but you should Google fart jar NFTs. And I'm the first one to break this live on YouTube right now. Kid Dynamite has purchased the most thus far, guaranteeing him, as of now, a 30-minute Zoom call with the fart jar NFT supplier. He who supplied it dealt it. If you dealt it, you supplied it. Does that make any sense? Seriously though, fart jar NFT. If the FTC or the SEC can prove that she didn't fart in any of those jars, the ones she's actually mails out jars. So the NFTs, of course, are virtual, but she's going to mail out 100 fart jars to people that are willing to burn their NFT. If the SEC could prove that she didn't actually fart into each of those jars, is she committing securities fraud? I don't know. I think that's securities fraud. Is it not? She's just sending you a jar. I think she should have to show a video with sound. Anyway. Given the market might be in turmoil in a couple quarters due to the Fed rate hikes, do you think Magnachip will hold around $20 next few months? Yes, Satya. I don't have any reason to think Magnachip's going to go up a lot. I don't think anyone has told you it would have went from 17 to 20 or 17 to 21 the break. I think things just move. And I think it's very undervalued. So can it get back to $25 a share, which is where it should probably be right now? Yeah, I think it can. I don't know how long it will take to get to that. It could take till next summer, but that's fine. Gonna ask Levine about securities for right now. If there are no fart jars, he'll like that. Make sure you pull me. I had an interesting thing happen to me today. I get Daily Harvest, which is like smoothies. I've been getting it since they first started years ago. I get one kind of smoothie I like, and it's now a $1 billion company, by the way. It was $1 million company when I started getting the smoothies. It was like the first month they launched. It was a big mistake not getting involved in that thing. But I get a text saying that They delivered. You like this story, Josh. Listen to this. I get a text saying that they delivered the smoothies, and 30 minutes later, I go out there, and the box is wide open, completely open. And I bring it in, and 5 of the 24 smoothies are completely missing. So I have 19 of my 24 smoothies. I have a door cam, and I check the video, and the delivery person, who's not FedEx or UPS, it's a third party, delivers the smoothies. I'm 99.9% sure the lid's open when she delivers it, so she knew it was open. I have this little box with treats in it that we've been doing since COVID started 2 years ago for delivery people. She grabs one of our treats, takes a photo of the smoothies, and leaves. I watch the next 20 minutes of the video. Nobody comes and steals any smoothies. And now I'm left with this dilemma. Do I report this person for delivering an open box with 5 smoothies? Or is that not worth the safety and security of my family, so that when this woman gets in trouble or something and then she comes over here and rings my doorbell, is it worth it for $35 to turn her in? So far, I'm thinking it is not worth it. Does that make me a coward? I think it might make me a little bit of a coward, but that's where I'm at right now. If anything has taught me the last 5 years post-Trump, it's that we really don't get anything being a hero with other human beings. Just let them be. I think just let them be. That's why I have a locked account on Twitter. Why I'm doing YouTubes, I'm not exactly sure. Only because like 20 of you are watching this. Otherwise, there's no upside in this. All right. Any other questions? So yeah, I don't think that there's anything, unfortunately, that wasn't all that I wanted. The 2023 plan is way more important than the capital return. If they were giving us back $3 dividend, but they said that they lost Samsung, where do you think the stock would go? Right? The money's still ours. It's on the balance sheet. And I don't trust them. I don't think what they're saying is the truth. So we'll see what happens once the buyback's complete. And we'll see what happens when it comes to the strategic plan. They put a poison pill in, guys. They didn't put a poison pill in so that they can go do a buyback a week later. They never had a poison pill before this. Not concerned. Frustrated, but not concerned. Anyway. All right. I'm going to go say hi to my daughter. Peace. Good seeing everybody. I'll be back on the next time there's something to discuss. I don't know when that's going to be. It might be a while. But if there is, I have no new ideas. Someone asked about new ideas. My 2022 goal is to turn my portfolio over more. Get out of some of Magnachip if it ever goes up, and then turn it over a little bit. But as of now, I'm fine with it being in this. And see what happens. All right, everybody. Bye. Thank you.